let's refocus and bring on board Gautam Shah, founder at Goldilocks Global Research. Time to get in some words of wisdom from Gautam Shah, given the way the market has been. Gautam, hi, morning. Good to be chatting with you today. You earlier told us that the market could develop cold feet around the 26,200 mark. We seem to be developing cold feet even before touching 26,000. What is your take on what the market is looking like right now? Because as we've heard, this is not a market where you can short, but also not a market where you can long without being very selective. How does one navigate a market like this, Gautam?
Good morning. Yes, for the last 3 months, we've been in a sort of a range, and the market has definitely developed cold feet every time it's attempted to get past that 26 200 number. In fact, we've had 4 or 5 attempts to get past this number, and it's failed every single time. It's almost as if the market is not ready to break out and move in sync with the rest of the world, because the world continues to be in a very strong bull market, whether you look at US, Europe, or rest of Asia. But I would still read it as consolidation. I know there is a lot of doom and gloom in the minds of people. And there is just no chatter about the Indian markets at this point of time, but there is not so much negativity on the charts as yet. I think the 25,450 number in my book is extremely important. If we are able to sustain above the same, there is a strong possibility that we can still rebound and move in sync with the rest of the world. And also because you are just 10 days away from the budget, which can potentially be a game changer. So I would say that 25,450 area is important. If you are able to hold on to the same, we can turn around and go back to the winning ways. But if that number were to get broken, then I think it would be extremely concerning from a medium term standpoint. But I think with all the measures put out by the government in the last 1 year, with the economy likely to pick up, earnings season likely to go off well, and possibly a market friendly budget, and with global markets doing extremely well, I wouldn't be very pessimistic. I know there is a lot of pain in the small cap and the micro cap side, but the breadth studies also have come to a point which tell me that the risk reward is in favor of going longs. So we are working with a very selectively bullish mindset at this point of time. Staying concentrated is probably more important than being diversified.
Gautam, hi, morning. You spoke about the support coming in for the Nifty there, but uh, where do you see the momentum coming from? Because if you need to cross 26,000, you need to have a momentum to push the markets across. And since we have been consolidating for nearly a year now, where do you think this consolidation, or when do you think this consolidation is going to end?
Well, I don't think we've consolidated for a year, because if you look at the last 6 months, 6 months back we were at 21,800. That's the level where we bottomed. 21,800 became a 26,300, which was a very large move. And in that period, we handled a lot of negative news flow, geopolitics, the Trump factor, economy in a bit of a troublesome space. So all of that was actually handled really well. And even today, as we speak, we are 2-3% away from lifetime highs. But really, when we talk about momentum, the momentum is outside India. For the first time in 20 years, at least what I have seen, India is known to be the poster boy or the center stage. It was always projected as the sun and everything revolved around it. But for the first time in 2 decades, India has probably been an underperformer and everything else is doing well. I still feel that this is temporary. World markets continue to be strong. In the Indian space, stocks or sectors which are reasonably valued are doing much better than the ones which are a lot more expensive. So I think metals, the entire PSU pack, the entire PSU banking pack, selective auto stocks is where we are focusing on, because that's where relative strength is, that's where momentum is, and that's where fair valuations is. So I'm really focusing there. And if the markets were to turn around from this support which I just spoken about, then I think things can really get back on track and you could see a lot more opportunities open up.
You spoke about PSU banks within that sector. PSU bank has run up a lot and outperformed the private sector banks in the last 1 year. Which are the pockets within the or stocks within the PSU sector that you look at closely, and what's your view on them?
See, the entire basket has done well. To be fair and honest, I think if you look at what SBI has done today, we speak about so much negativity, and you have a stock like SBI, which is at 1,050. It just tells you that if you are in the right pockets, alpha has been generated in the last 3 to 6 months. PSU Banking Index tested our target of 9,000, which we gave out in many of our reports in the last 3 months. I still don't see any signs of topping out. I think there is potentially another another 2,000 point upside on the PSU banking index. It will be led by the big boys in the sector. So the top 4 or 5 names we continue to like. I think they will deliver supernormal returns even this year. Valuations are still very, very comfortable. Nothing to do with foreign policy, and there is definitely under ownership. So I think all the top 4 or 5 names we like, and I think they will outperform. So one should stay committed.
Okay, and Gautam, talk to us about metals. You know, they've been the classic poster boy of the market in terms of where the markets were headed. And now you have such a massive surge in silver that continues. Gold is also doing well, and copper is the new a new metal that's joining that list. Talk to us about where you're seeing the metal index and some of these base and precious metals heading from here.
6 months back when we put out our bullish view on metals, we were questioned quite a bit because fundamentally there was no case for metal stocks to do well. In fact, a lot of the top management of various companies whom I speak to, they said that what's so positive about it because we are not doing so well on the ground. But then when we saw it on the charts, we just felt that there is something happening. And then you had that entire base metal rally with what copper has done, zinc has done, aluminum has done in the recent past. And now the fundamentals are actually kicking in. So the chart setup continues to be good. I think the hard assets space is something which has been very exciting in the last 6 months. I think there is potential for a lot more upside. Our working target for the metals index is 12,000, but I think even a 15,000 is doable over the slightly more longer term. This is a big trade. Non-ferrous is already done very well, and one should stay committed. Now the iron and steel producers and the ferrous side is likely to kick in. So I think all the top stocks in that space should do well. And as you rightly pointed out, the entire base metals pack, with copper and aluminum and zinc, when we see these charts, I feel that the entire year we are going to see a strong trend. And that could be the reason why India and global stocks. So it's not just Indian metals. If you look at the US metals and mining ETF, it's been one of the best performers, since we track the US markets and we have a product. It's been the best performer in the last 6 months. And I think the going is likely to get better. And the fundamentals, in some sense, will catch up with the price action.
How do you look at the FMCG or consumption pack there? We've seen some kind of positive movement happening in the FMCG pack. Of course, they've been benefited from the consumption boost which came from GST cuts. How do you see the HULs and the Marico and the Godrej as a stock?
Well, there are 2 points here. Number one, all of these are extremely expensive. And secondly, there are questions about the consumption uptick in the economy. We are still trying to assess data whether consumption uptick is indeed happening or not. So you really can't take a very confident call there. On an overall basis, the FMCG index has been one of the worst performers. Let's not run away from that. And I think even from current levels, I don't see any great performance because I think there are still questions about the economy. I would like to watch this quarter results completely and then possibly take a call. I would like to be in stocks, which have shown relative strength and which have fair valuations. Many of these top FMCG companies or consumption companies trade on very rich valuations. So I don't think there is a case to be investing in them. In fact, I have a similar view for the entire technology space. I've been quite negative on it for the last 6 months, and I continue to believe that Indian IT will not do as well as they have been doing for the last 3 years, maybe because of AI disruption, maybe because of valuations, and also because there are better opportunities around the world in the technology space.
Okay, with that, Gautam, thanks so much for your time today. Very insightful conversation and so good to be chatting with you this morning. Thank you.